What's up, Banter fam? Welcome back to the show where we interview the smartest minds in the crypto space every single week. I'm your host, Miles, and today we're talking to Wangarian, the founder of Tangent Ventures. Wangarian, welcome to the show. How are you today?
Hey, Miles, it's nice to be here. Thanks for having me.
We've got a lot to discuss, man. I want to ask you about your favorite projects for next cycle, your investment strategy, narrative trading, and much more. But just to kick it off, nice and simple, would you like to tell the audience a little bit more about yourself?
Yeah, so my name is Daryl. I'm like half a non. My Twitter handle is Wangarian. I'm from Singapore. I am one of the co-founders of Tangent, which is a sort of Asian crypto fund based out of Singapore. My co-founder is, Jason Choi. He's based out of Hong Kong. And so what we do on a day-to-day basis is basically look at very interesting 0 to 1 crypto startups that are looking to help spread or make crypto adoption easier in any ways or forms necessary. And we're really focused on really only investing in a select number of startups. So we typically focus on investing in 10 startups, not more than 10 startups a year. And on the side, we also do quite a bit of liquid trading, with everyone else in crypto, looking at the secondary markets is, sort of what we live and breathe.
Yep. Could you tell us a little bit more about your investment strategy at Tangent?
Yeah, so I think what we try and look for are, when we'll take a barbell approach to investing on the primary side. I think we focus on pre-seed or seed investments, so we try to be the first check in to these startups. And because of the high risk that we're taking, we really only try and look for 0 to 1 innovative ideas, things that help push the space, things that help unlock new consumer behaviors that haven't really been done before. And as such, we're typically looking at at the application layer. But we have done, stuff like layer ones that we think, could revitalize or revolution or bring a new spin to the existing layer one space. But the bread and butter is still application specific startups.
You mentioned something interesting. You said you guys take like the barbell approach. Do you want to go like a little bit further into what that means and how that influences your portfolio construction?
Yeah, so on one end, we go very far down the risk curve, and we're taking 3 to 5 year long term bets on a very small amount of startups, and then we spend as much time as we can with these guys to make sure that they become successes. And on the other hand, we also do a lot of liquid investing. So we, as you expect, we're big holders of Bitcoin, ETH, and several or other altcoins out there, as whichever altcoin is the most popular or the flavor of the month at the moment. We're also actively looking at the market there. So that is sort of the barbell approach. We're all in crypto. I think I have anecdotally about more than 95% of my net worth in crypto, and no plans on changing that anytime soon. So ultimate believers there.
Risk on.
Risk on. That's right.
So how did you first get into crypto?
It's pretty interesting. My background in my previous life, I was an investment banker at JP Morgan. And so this was in 2020, during the March 2020 crash. And I saw equities going down. And, this is when Bitcoin and crypto had its do or die moment. And my thinking was basically, how do I, sort of earn $1 million in the job I was doing? And at the time, even though you could probably earn $1 million after like 5 to 10 years of working in banking, that wasn't as exciting as what I wanted. And so I kind of stumbled across crypto as this nascent asset class that could provide pretty interesting risk reward opportunities. And then nobody around me at the time really was looking at it. And I spent like 6 months just sort of diving into it myself before I was more or less convinced to join the space full time. So I quit my job. At the time, everyone looked at me like I was crazy. And then very thankfully, 𝗧𝗿𝗃𝗍𝗄 offered me a job as sort of his second analyst at Defiance Capital. And that was really how I sort of got into the space in 2020. And then fast forward 2 years, I learned enough under his wing and sort of decided to branch out and join partners with my current partner today, Jason Choi.
Wow, that's amazing. So you're at JP Morgan, and then you made the transition, you went TradFi to Web3.
Yeah, it was a complete 180 basically. But yeah, I think it's up to today that was the best decision of my career. So really thankful for Arthur for giving me that opportunity.
So how come you made that decision? What was there something about crypto that really like stood out to you that attracted you to the space?
Yeah, I thought it was just this entirely, like, to me it was one of those things where I think every decade you would have a new trend that would appear, and that would provide outsized returns for early adopters of that trend. I think in the 70s or 80s it was private equity. That was the case. In the 90s it was aggressive, sort of, I guess, small cap equity investing. And in the 2000s and to the early 2010s, it was venture capital. So that is sort of the trends that you could see as the decades went by. And then I think after the launch of Ethereum, it was really just crypto taking hold. And so I kind of realized that was happening. I looked at the 2017 hype cycle as sort of a proof of concept. That people really enjoyed this. And then I also looked at the decentralized sort of casino sort of alternative that you would get. And everything's just sort of clicked to me. So that was really where the conviction was gained. And I mean, apart from everything else, we looked at DeFi. Even though now DeFi is sort of falling out of the limelight quite a bit, but I still think the underlying technology and architecture that DeFi brings is, on a long-term basis, a better alternative to the traditional financial rails. So as someone coming from, TradFi, this made a lot of sense to me. And yeah, it really took me 6 months of just getting through the scams on my own, and getting the conviction to see what is legitimate and what is not. Just, basically being able, like, going through trials by yourself and getting your scars and getting scammed over and over before you're like, okay, now I know what's going on. Now I'm ready to tackle this full time.
When most people get into crypto, usually like the major draw card is either Bitcoin or Ethereum, the two biggest projects, and usually like you'll have a thesis around one or the other. I wanted to ask you, like, starting with Bitcoin, like the biggest cryptocurrency, what's your thesis on Bitcoin? Do you believe in Bitcoin? What do you think it's becoming or going to become?
I think the concept of it being a decentralized store of value will become increasingly important as the broader traditional markets begin to destabilize, is what we're sort of seeing already. However, that was not what sold me into crypto. I think a decentralized sort of gold narrative is important, but it wasn't the biggest driver. I think Ethereum was far more interesting as a sort of reserve asset, and with the utility that it brought as well. So Bitcoin to me was the stepping stone of getting into crypto. But after you sort of learn about Bitcoin, then you learn about Ethereum. It seems like the logical progression to move on to it. I think every once in a while, Bitcoin will have its day, but I think with the generic undercurrents that we're seeing now, and we talk to a lot of large funds in the space, I think as crypto continues to take hold of the younger population, Ethereum will become the more popular choice asset over time. Although this, there'll be massive, moments of volatility between now and then, but I think that is the general sort of current where it's going.
Yeah. So what's your, I guess, long-term thesis on Ethereum?
I think it's just a reserve asset for sort of decentralized blockchains. It's the most lending asset. It is the oldest asset. It hasn't, it's the most proven. And with the proof of stake introductions right now, I think the concept of it being deflationary is going to be a pretty popular meme. as it has been.
Hmm.
Now that you have a sort of effective risk-free yield on it via staking, this is going to be quite attractive as well. I think there are a lot of value or fundamental-oriented investors looking for yield. So with those reasons, I'm quite happy sort of holding a large percentage of my portfolio into it, depending on obviously the time frame, but that is the asset that I will sort of default into when I'm uncertain but want to have sort of macro beta exposure.
So you would weight heavier towards Ethereum versus Bitcoin?
Most
In
definitely,
general,
yes.
yeah.
Yeah, I think there will be times when I think, as I said, Bitcoin has its day. I think like now is a fantastic time actually, with traditional banks going in full on hysteria mode. But over time, I think the thesis for I guess what Ethereum represents is much more compelling than Bitcoin.
It's really interesting. Like over the last week or so with the USDC stuff that went on, a lot of people were actually swapping out of USDC into Bitcoin and ETH kind of as like value assets as opposed to stablecoins. Do you think that's like there's a genuine future where people do view like Bitcoin and ETH as like on-chain value stores?
So I think that is a very untested thesis. I think this weekend we saw first signs that may have legs. I'm very apprehensive to say that is correct because we really haven't been tested yet. And I hope we never get tested, to be honest. That would be a pretty dire situation. But it was pretty evident that people were swapping into Bitcoin and ETH. And I think a lot of them were running the synthetic dollar trade where they would long spot and then short on the perpetual side.
Yeah.
But I think a lot of people as well would just long spot. Like if, for example, if you were to tell me USDT goes down, USDC goes down, no stablecoin is safe, then naturally you have no choice but to long Bitcoin and ETH. I think that's what a lot of people will do. Whether that sort of kicks off general accepted, whether that changes the prevailing sentiment of how Bitcoin and ETH are viewed, because right now they're still viewed, well, until 3 days ago, Bitcoin and ETH were viewed as risk-on assets. Now that correlation is a bit unclear because of what's happening in TradFi. But I'm as I said, I'm very skeptical on calling it on saying that they're not risk-on assets, right? Because right now they're not trading as risk-on assets. But I think Bitcoin could be a deflationary, an alternative store value. So it should not trade as a risk-on asset. But I think Ethereum most definitely should trade as a risk-on asset. But right now the correlations are still too close, because of whatever algorithms market makers have. But over time, I think that will diverge if that theory holds true. But I'm still skeptical. I wouldn't go so far as to call it that yet.
So you think in the long term, maybe we see kind of Bitcoin and ETH split apart as to how they're viewed in the market? Like Ethereum would theoretically, as a risk asset, like appreciate much quicker during general times of optimism in the markets, and Bitcoin maybe would handle downside a bit better, but wouldn't have as much upside.
Correct. Yes, I think in a stable state, as more rational market participants come into the picture, that may be the case. But I think.
How do you?
Yeah, I'm sorry. Just to clarify, I think we probably have like at least 5 to 10 years to go before we get to sort of that steady state where that can happen.
People always tend to, I guess, like underestimate time frames, especially in like an industry like this, which is still relatively nascent.
Yeah,
I think that people kind of overestimate how much can be done in a short amount of time.
Yeah, I mean, if you look at the last 12 months, you have Luna, 3 Arrows, FTX, Circle in 12 months alone, right? So I think that is, if you're in crypto the last 12 months, it was definitely not pleasant.
What were your top learnings from all those experiences? Like looking back on everything, what were your top things that you took out of it and are now applying to your journey going forward?
So I think the biggest thing for me was the most important thing is focus on capital preservation. That is surviving is literally the most important thing. A lot of people say it, but I think how this translates into action is basically at the first sign of trouble, you just get out. I think this saved me for because I was, funnily enough, I was exposed to all four events. Basically, I was an LFG investor in Luna. I had outstanding loans to Three Arrows when just before they went down, and I had money in FTX. And what I learned from those lessons was basically, you either panic. If you want to panic, you better panic first. You panic early. So for Luna, for example, once we started seeing UST start to depeg, basically it seemed pretty obvious, but what I did was we basically started shorting UST and Luna, but that saw more of an active market participant perspective. For other stuff like FTX, for example, once you started seeing the Alameda sort of scrambling on chain to try and refill the vaults when people were putting money during the bank run, just get your money out. I think you just panic first and then you ask questions later, because if you're right, you save yourself. You literally save your life. If you're wrong, sure. I mean, what does it cost you? It costs you like a couple of dollars in transaction fees. That's it. But so even in like the latest USDC example, right? A lot of people, we had some USDC exposure, as with many people, but we got out, mostly 98, 99 cents on the dollar. I still think it's the right process to get out first. And this was before we knew everything about, how SVB was going to be handled by the FDIC, and before the Circle exposure was known to the public. So I think when in times of extreme uncertainty, just pull your money first and then conserve capital. I think that is the most important thing to me.
Yeah, no, I think that's great advice. So how are you feeling about the market at the moment? Do you think the worst is behind us? Or you kind of, what's your...
So I think if you look at prices, I think Ethereum bottomed, call it 10 months ago when 3AC went down. Ethereum went to $900. It hasn't gone back since. And since then, despite the treacherous events that have unfolded in our industry, you would seem like if I told you what had happened in the last 12 months and I didn't tell you the Ethereum price, you would think that ETH is like $400 right now, based on how bad this stuff has been. But ETH made a higher low at FTX at 1.2K. It made another higher low in the USDT depeg, which is 1.4K. So to me, it's still like my macro thesis was, we had sort of entered a different regime change after 3AC was liquidated, because that was when the majority of leverage in crypto was basically flushed. And I think that still holds true. So I still think we are in a structural uptrend. I wouldn't say we're in a bull market yet. I think there's still a lot of PVP capital right now. And the people that you're trading against are people that have survived the events of the last 12 months with you. So they're definitely savvy. But I think crypto survives whatever is being thrown at it, with whatever the US government is doing. It will survive. And I think prices will continue to trend higher, as long as, I guess, the macro market doesn't go into a full-blown meltdown, which it may have a chance of doing at the moment.
Do you pay attention to macro? Does that affect your investment plans or the way you trade?
100%. I still think the Fed is still the single most important entity to look at, that ultimately drives the currents. So, for all the specific the crypto specific thesis that we have on why we're bullish crypto, what the Fed does ultimately will drive a large part of the undercurrents. So if the Fed is, hiking rates, you are going to have a very challenging time. If the Fed is easing rates, that is usually designed to be more aggressive in the market. So we look at CPI and we look at FOMC meetings with great effect, basically, in determining how we think on structuring beta for the next 1 month.
Do you do it on a month basis, or do you have like a broader long-term macro theory as well?
No, but I don't try and pretend that I can predict what's going to happen in 6 to 12 months. I think it's pretty difficult. Like, I don't even think some of us can predict what's going to happen in the next week or so in crypto. But we try and have a 1 month view on where the market's going based on what the Fed is doing, what inflation data is saying. So we try and have a 1 month view, and we try and have a 12 months view. So that is how we're sort of structuring our liquid positions. But obviously, we are in crypto for the long term. So that's why we also do our venture investing with a 5-year time horizon.
So this video is going to be probably uploaded like a couple of days after we're recording it. So we still have like some key data to come, but FOMC is next week. Do you kind of have a theory for the next month, like March going into April, or are you waiting more for FOMC? Because obviously we've had crazy swings in the market's prediction. It was like 0, and then it was 25 BPS, then it was 50, then back to 25, then it's like just all over the place. So
I think it's extremely fluid. So I think whatever I say now, will likely be outdated in next couple of days.
By the time this video is up,
exactly,
it might be outdated.
So I think you need to look at CPI pretty importantly. You need to look at how much contagion happens with the other regional banks in the US. Europe is already beginning to see signs of systemic cracking as well. So that is pretty important to see. What I would say that how the US government has acted, with the exception of closing down Signature Bank, was the correct thing to do. They punished investors and equity holders and management teams that took on excessive risk that they shouldn't have, but they protected depositors, right? Which was the vital thing to do. So they stopped contagion in its tracks, but still allowed for natural capitalism to play out. So I think that was a very important nuance that they didn't do during 2008, where they bailed out basically all the big banks. So that is important, and I salute it. But I think what they did with Signature, as we're probably finding out, was a very specific targeted attack on crypto.
Yeah, I mean that's kind of, I think a month ago, like Nick Carter wrote that blog post about Operation 𝗟𝗃𝗿𝗄 2.0, and at the time, like a lot of people laughed at him and ridiculed him. But I think, like looking back on it 1 month later, a lot of the stuff he said there like played out. So you can't really deny it anymore. So how do you view that? I guess the attack on crypto, and how do you see that playing out? Because it's kind of it's pretty crazy.
It's certainly saddening to see. I think what happens over the long term is the US has made its stance on crypto very, very clear. And what this will do is ultimately drive talent and capital away from the US. So if you are a US founder now, you'd be thinking twice whether you want to commit to this career in this country, right? Because you have to be so careful of whether you launch a token. If you launch a token, does it have any value accrual? If you are offering, a trading service or any sort of DeFi protocol, can you offer it to US depositors? All these sort of nuances that really don't come in most other countries. So I think what happens now is the East is going to have its time of day. I think capital and adoption coming out of Asia is going to increase over time. And you will increasingly see more projects that are built by Asian teams come to light. I think right now, predominantly the core building blocks or pillars of crypto have all come from either the US or European teams. We have seen very little of that come from Asian teams. I think that may be on the cusp of changing as a result of the very aggressive regulation coming out of the US.
So is the US making a big mistake?
I think so. I think so. So, but the important nuance here is there's a lot of path dependency on on how sort of crypto is handled. So, for example, if the US comes out with very negative regulatory stances on crypto, uh, Asia could follow suit, right? A lot of governments take heed of what the US is doing and basically follows it. So if that happens, then that's definitely just net horrendous for the space everywhere. But if the rest of the world says, hey, we're open for business, come and work with us, we're happy to push crypto forward, then I think it's going to be. I think the US is making a huge mistake, basically.
So what does happen if they like continue to shut off on and off ramps, continue to like sanction either banks or protocols, and essentially like starve crypto of liquidity? How does that affect the market? Given I guess crypto is still relatively US dependent. Do you think that like affects things in the short term before these projects have time to move offshore?
I think on a structural level, the capital that is drying up is going to be significant, right? I think a lot of the funds right now are thinking twice if they still have an on and off ramp. They may be thinking, should we off ramp first? Because if we don't off ramp now, we may not be able to get our money out, for example. I think that is a very that is a thought that's happening pretty often right now across Americans. So I think the the medium to long term effects are pretty dire because you just have significantly less capital allocated to crypto. The talent as well is going to basically just move offshore or just go pure or none. But I think on a short term basis, the impact is not as severe because there is no loss of funds or loss of wealth as a result of these crackdowns, right? Nobody's actually losing dollars, which is really what stops or halts prices from continuing to go up. The marginal buyer still does not feel like he's poorer as a result of what has happened.
You're still relatively, obviously, very bullish long term. That's your thesis. You're 95% in crypto, so clearly you don't think it's going to be the end of crypto. So, what's your thesis for us overcoming some of the US regulatory sanctions?
I mean that it's very simple, right? I think technology will always triumph regulation, in one way or another. Right now, we're definitely seeing setbacks happen, but in Asia, with Hong Kong recently, I think when one door closes, another door opens. So I think you're basically going to see more of that happen in Asia, and we hope that this isn't just a short-term knee-jerk reaction. But if it isn't, as I said, that's why we're pretty bullish Asia, and we're looking to find these early startup Asian founders and help them sort of build products that can rival what the Americans and what the Europeans have built as well.
Yeah, because if you are bullish Asia, then it makes sense to start looking at like some of the best projects in that space. Obviously, recently we had that Chinese narrative. Now I'm aware like a lot of the projects that ran in that narrative maybe were dubious in their actual origins. But do you think like that has any like genuine steam if you can find good projects in that like in Asian countries in general? Do you think that has potential to keep running as a trend?
Yeah, I mean, I think the most important thing is you need to have a fundamental application that people can enjoy and use, right? I think excellent example is StepN, right? GMT. I think that onboarded millions of people from Korea and China, and they just went crazy with it, right? I think that's a perfect example of an application that was Asian originated and captured a large amount of the Asian audience, and did fantastically well. So if we can have more of that come out, and hopefully on a more sustainable basis, I think the Posinomics with StepN was a bit aggressive, but if we try, we are seeing this from teams building now. I think people are much smarter on tokenomics. People understand the concept of using tokens as a marketing expense as opposed to just free money that you throw at people. I think we will see very solid applications come up with smart tokenomics that will kickstart virtuous feedback loops that can last perhaps years.
How do you find I guess, Asian alpha? Because I guess a lot of people in the US are maybe in like a bit of a US English bubble when it comes to crypto research, and it's harder to find these projects. Do you have any tips on like how you could potentially like spot an upcoming gem in other countries?
So I think the two nuances here. I think the first one you're talking about is finding, I guess, coins that the Chinese one or the Koreans are looking to long before they long it. I think that's not really an area where we focus a lot of our time on. I think what we do is try and speak to founders building the projects on a fundamental bit of value, and then connect them there, and then offer advice early on. So on that one, you really just have to work the grounds, right? You have to be out there, speaking to founders, giving feedback, helping other founders connect, and perhaps on the hiring side, on the go-to-market side, and then over time, you'll get, as your network improves, you'll get exposure to more of these different guys coming up, be it in Vietnam and Singapore, Malaysia, or Korea or Japan.
Is there a way that people like sitting at home can replicate that, obviously in a less effective but like digital manner, like certain groups, maybe watching like videos of these guys, and any resources?
I think if you're looking at Asia, you probably need to have a WeChat account, which may be a bit challenging for some Americans. I think Twitter CT is still very heavily Western driven, so chances are you're not going to see CT is not probably your best platform of alpha if you're looking for these sort of narratives. But I wouldn't recommend spending too much time on them. I think still ultimately the demographic of people who are buying this, I think, is not as important as, or buying a coin is not as important as the fundamental elements of whether this is a good application or this is a good token with strong tokenomics. So I don't think it's a huge deal.
It was clearly like a very hot narrative, and I think, especially when the market is running, we just see like it's like narrative city. Like there was AI, and then there was like perp DEXs, and some have longevity and some maybe don't have longevity. But like, how do you view narrative trading in general? Like, do you think it's effective? Do you think some of it's just ridiculous trade narratives?
Well, I think crypto is almost entirely narrative driven on the short term, right? I think if you are a pure fundamental investor, you would have, I think the last time you would have a very good win was probably like 2021. I think so. So for me, narrative investing is most powerful when you match a particular narrative with adoption acceleration. It can be in the form of trading volume, it can be in the form of TVL, it can be in the form of number of users. But you need some form of fundamental statistic that tells you this is gaining traction, in order for you to pair it with sort of mind share of a particular narrative taking off. So for example, I think 𝗟𝗄𝗽 was a fantastic one, and then later step in. But using the 𝗟𝗄𝗽 example, I think Web3 gaming was a narrative that was coming on in 2021 that was pretty popular. And 𝗟𝗄𝗽 was one of those rare games that were live already. And then you could also take a look on chain and look at Dune to see how quickly the 𝗟𝗄𝗽 community was growing, right? You could see how many games were being played, how many 𝗟𝗄𝗽s were being bred, what the price of 𝗟𝗄𝗽s were. And when you see that sort of hockey stick acceleration growth, coupled with the mindset of like Web3 gaming is going to be the next big thing, that's really how you have outrageous sort of 50 to 100x runs on alts. And I think that's where it's the most challenging thing to do. I think it's very rare to to have a narrative match one of these perfect, I guess, like fundamental stories, but it's the most powerful. So that's where we really try and focus our time on to find these guys. Because if you miss one or the other, you may have a 30% pump or 50% pump, but you're never really going to have that make it or break it trade that can 10x your portfolio, for example.
So what narratives are you looking at? Are there any sectors that specifically interest you at the moment?
So I think right now it's still pretty challenging. I think as you probably haven't seen any on-chain adoption of anything meaningful in the last 6 months. I would say, you know, I think GMX was probably on a fundamental level the most interesting application to gain adoption recently. But I have some reservations on the GMX token model. And I think the narrative wasn't ready for it yet, with the exception of the Arbitrum, the short-lived Arbitrum sort of hype. But I think on a longer-term perspective, Web3 gaming is still where I see the most interesting opportunities. And these aren't sort of tickers that I'm thinking of in my head. I don't even know what these are yet. But based on the calls that we're having on the primary market side, we know of very high quality games or projects building high quality games that are coming out this year and next year. So if you pair that with nuanced tokenomic models, where you can capture a share of the virtual economies happening in these games, I think you're going to see some pretty insane runs on tokens when these launch. But the failure rate in Web3 gaming is also going to be abnormally high. I think for every one token that 5x's, you're going to have 95 tokens that die. So it's going to be, you really have to look at the fundamentals for Web3 gaming. But it's going to be, I think, a field day. It's going to be a hell of a fun time playing the game, learning the different tokenomics, and then seeing whether things can take off in the way it actually did.
Are there any like specific gaming projects you're looking forward to, or that you've maybe invested in?
I won't really want to name names at the moment.
Sure.
Yeah, I think we'll just pass on that for now.
Any like specific sectors? Because like I guess there's a few ways to approach gaming, right? If you think gaming's the future, you've got like L1 blockchains, L2 blockchains, which can facilitate gaming. You've got individual games that are launching, and then you've also got gaming infrastructure. So NFT marketplaces, gaming studios. Is there any one of those vectors that like interests you most, that you think like there's the most upside?
So I think it all depends on how far out on the risk curve you want to go. I think the more conservative gaming proxies would be stuff like MATIC and IMX. I think IMX in particular is a pretty good one because they're a dedicated gaming L1. I think the more of these will pop up as sort of your more conservative sort of gaming proxies. And then as you move further than the risk curve, you could have maybe stuff like Ronin, for example, which is like a dedicated, sort of side chain for games as well. And then, NFT marketplaces, yes and no. I still think all successful games will eventually in-house their own NFT marketplaces to capture the value for themselves. So not super bullish NFT marketplaces for gaming assets yet. But I still think where the gold mine is the individual games. And I think this will come in the form of your sort of MMORPGs. I think the next generation of MapleStory, RuneScape, World of Warcraft, I think that's where you really get the home run hits. But those are also the most challenging to pull off from a gaming development perspective, and they also take the most time. So I don't expect to see something until probably 2024, maybe even later. I think there was one. Actually, I wouldn't go into it. I think like certain. I will say this. I think hype for gaming projects is very often misplaced. So what may be the shiny new thing in 2021 or even now may not, come up to anything material when they finally launch. I think you really have to see it as it comes up.
Yeah. And what do you think about studios? Studios versus you said individual games are where you're going to make the most money, but like I guess there's like, I don't know. I'll just list a few off the top of my head. Like 𝗟𝗲, Vulcan Forge. You even got like EOS, which is like a crypto, like the Steam of crypto gaming. Do you think investing in studios could be like, and not necessarily alluding to those tokens specifically, but just in general, is that like a good approach, or are you more interested in just like going, okay, this individual game looks good, I'll look at investing in that.
I think proxy investing like that is pretty good as well. It depends on how much time you have to dedicate to this, because I think if you go game by game, you're probably going to spend a lot of time in finding the right ones. I think you could have, stuff like you mentioned could take off as they become sort of the de facto platform for games, like Web3 Steam, basically. But we've seen that narrative before on the primary market side. It's very, very crowded. I think there's a huge amount of competition there. So I think wait to see sort of the market decide the winner. I think, for example, for now, it's the predominant gaming exposure is probably 𝗟𝗏 and IMAX and MATIC to an extent. But I won't be so quick to say that I would just invest in these tokens for exposure.
Yeah, makes sense. I wanted to ask you about the Arbitrum token launch. So you obviously have, I've seen a lot of Arbitrum content. You've kind of been covering that a little bit. I think you said something about a month ago, like don't fade Arbitrum or something like that.
Yeah.
What's your opinion on the Arbitrum ecosystem, and then also like the token, which surely we're getting close now?
So I think they did a fantastic job in terms of strategy to sort of, I guess, tease the carrot in front of the user for the longest time without actually firing the bullet. I think what they've done on the ecosystem side is very healthy organic growth. Most of the time, it's without the end goal of trying to get to the Arbitrum token, but that's always sort of in the back of your mind. I think right now they have sort of strategically, I think they should have launched a token by now. I think it's a bit of an error to wait this long or to sort of tease it for so long and then just have nothing come out. I think it's, to an extent, angered the ecosystem. I don't think there will be any long-term sort of ecosystem damage or reputation damage from what they're doing, unless they just like never launch a token. Like if it doesn't come out this year, I think a lot of
soon. When do you think it is? Like surely in the next few months, or like sooner the better, really.
I agree with you. I think sooner the better. In terms of timeline, it's anybody's guess. I hope it's soon. I hope it comes in the next few months. But yeah, it's really anyone's guess.
How do you think that'll impact the market? Like, will it have a flow-on effect to other L2s, Ethereum?
I think there'll be just a congregation towards Arbitrum when it launches. So I think there'll be a pretty popular thought that's been going on already. It's like a long RB, short OP sort of play. I'm more than happy to just long RB when it comes out. I think definitely RB will have a spot in our portfolio from a long-term fundamental basis. Right now, it's simply as a proxy for the adoption that happens on the chain. But over a long enough time horizon, I'll need to see value accrual to the RB token, which all L2s still struggle to have. Which is why ETH is really just such a strong asset to hold, because of how much fees ultimately drop down to the L1, regardless of whatever L2 you're using.
How do you view the L2 space progressing over time? Because obviously we've seen MATIC perform pretty strongly. Then obviously Arbitrum and Optimism have gained a lot of traction. You've got some of the ZK products now starting to launch, like ZK Sync, Darknet. How do you view the L2 space progressing?
I think it's going to be insanely contested. I think you're going to have at least 3 to 4 powerhouse ZK EVMs coming online, probably in the next 18 months. And we're already seeing a lot of optimistic rollups as a service solutions coming to market. So you're going to see a lot of app chains launching their individual rollups going forward. So what you're going to have is a lot of big guys with their individual ecosystems and a lot of smaller players acting as applications with their own rollups by themselves. It's going to be pretty interesting. I think it's a net win for the user because definitely there'll be token incentives being thrown around amongst all these ecosystems. And you have, I guess, the most, like, you have multiple different playgrounds to play in, right? I think eventually ZK, the ZK powerhouses will take over, as you know, but it's really contingent on the BD that they do. I think Arbitrum has done a fantastic job in sort of becoming the intermediary ecosystem for the Ethereum L2 space, but it remains to be seen whether Scroll, ZK Sync, Starkware, for example, can replicate that sort of success that what Arbitrum and Optimism have done. But yeah, I think it's going to be a very fun space for the retail market, because you've seen what one Arbitrum ecosystem can do. Now you're going to have 3, 4, 5, 6 come up in the next 2 years.
Are you looking forward to like some of these ZK products?
I think from a venture perspective, we were quite conservative, because a lot of them, once you slap the ZK title on top of it, the valuations just went up by 3 or 4x.
Stocknet was like 8 bill or something crazy, and like ZK Sync was 4 bill, like around that. It's insane.
And Scroll was 2, or was it 3 in the last round? But I think a lot of these things are heavily hyped going into their launches. It's not necessarily a bad thing for users, but I think from a venture investing point of view, it was a lot of them were uninvestable.
What are your thoughts on Polygon, MATIC? Because they're implementing a ZK EVM product after they acquired Hermes Network.
Yeah.
And yeah, what are your thoughts on that ecosystem as a whole?
I think the MATIC BD team have displayed probably the best. They probably have the best BD team in the world today so far. I think what they've been able to do from where they came from is extremely impressive. However, the big concern for MATIC and the longevity of their EVM, their ZK EVM push, is the fact that their dry powder is significantly dwindled. They only have, if I'm not wrong, 1.9 billion MATIC tokens left in their treasury, and they've been spending an exorbitant amount of money as a result of their BD efforts over the last 2 years. So my concern is they will not be able to compete and offer the same amount of firepower that fresh projects like Starkware or Scroll or ZK Sync can do. So, and in this environment, where attention is all that matters, I think it's going to cost them over the long term. But we'll see. I think they could definitely have enough to be able to prove me wrong. And I would not fade the BD team at MATIC.
What do you think about Polygon from a technological perspective?
I think what they have now is ultimately still a sidechain, but it's a sidechain that works. I think there were quite a number of reorgs that were happening on the chain, and from a developer point of view, there have been quite a number of complaints on using the chain. So we're going to have to see. I haven't actually kept up to date with how live their ZK EVM is. I recall it's launching this month. Is that correct?
Yeah.
Okay. So
I think it goes testnet first before it's deployed.
Right.
Mainnet,
right.
I believe.
Yeah. So we'll have to see. Because I'm not a dev, but I speak to a lot of them. So I'll check in with them to see what the thought is.
I've heard it's good. I've spoken to a few developers, and they say like their ZK product's actually pretty good. So I guess we just need to see it in practice now to evaluate it.
I'm very hesitant on placing on making judgment calls before products go live, because things can change very quickly, and a lot of hype is often overblown before launches. So yeah, I usually have no comment until I see it go live, and then I hear it from developers who work on it firsthand, and then that's where I make the judgment call.
So you're fairly active in the DeFi space. Where are you seeing the most innovation and opportunity in DeFi? Like we've seen recently, Perp DEXs, I guess, have like performed quite well, gained a lot of traction. We've seen like many developments in the DEX space over the last couple of years. Many interesting models starting to launch. Where are you seeing the most opportunity in DeFi over the next year, 2 years, 3 years?
So, funnily enough, I still think the biggest pie in the sky that hasn't been eaten yet is still the decentralized stablecoin vertical, right? And now more than ever, as you can imagine, there isn't a proper scalable decentralized stablecoin that doesn't have USDC as part of as a significant part of its collateral base. So I think that is something that we still drastically need. I think Frax is probably well, now it's still heavily reliant on USDC, but it's I think making the right strides in moving away from that. I think LQTY liquidity has been an interesting public good experiment that has taken off a little bit recently. But I think as with all protocol teams, you need a fully functioning BD team to go out there and aggressively push your product, right? So with the case with LQTY, nobody's pushing it. So I'm not actually sure whether there's a team running it full time anymore. So it's a bit hard to see adoption for the LUSD stablecoin to come out. So I think that's something that's what we desperately need. I think real yield, which was the narrative for GMX for a while, is definitely important. On the venture side, we were seeing a number of projects try and match off-chain yield opportunities with on-chain capital. So variations of what you see with Maple Finance, with Clearpool, with Goldfinch, come in the form of trade financing, inventory financing. I think that's pretty interesting as well. But I think adoption will still be very, very slow, and it's not exciting the way retail users imagine DeFi, because you can't slap 1,000% APYs and stuff and go ham with it. But I think DeFi adoption or improvements in DeFi architecture is still pretty slow to me so far. I think on the venture side, we're seeing very little attempts at new DeFi protocols, and the ones that do attempt have little to no traction, simply because people are not interested in taking on the smart contract risk anymore. I think as evidenced by the latest Euler hack as well. It's a pretty tough. If you're a DeFi participant, you can't really sleep easy at night, to be quite honest. Even I think the Euler team was one of the strongest teams technically, and they had consistent audits. They were consistently speaking to security experts, and they still got such a devastating hack. So it's just, it's just one of like the dozens of hacks that have happened over the last 2 years. So it's very, I would say it's very depressing to see. But I still think that the theoretical advantages of DeFi should make it a better ecosystem. But the problem with live code is that as long as you're consistently shipping the code or you're consistently making changes or upgrades to the code, you're always going to be prone to different attack vectors that hackers can see. So it's a very, very sharp sword that you wield, and it goes both ways, basically.
How do you prevent those hacks? I mean, obviously, more extensive auditing is one, but is there like some sort of like loss mitigation software or protocol or something that can like help? I've seen a few like different attempts at it, like Lossless is one, for example. But how do you think the space can evolve in the future in regards to the exploitation of these protocols?
So I think there are a couple of ways. I think the first thing is you can adopt a stage by stage sort of shipping process, right? So you code whatever you need for this particular stage or product, and you go through multiple different audits, and then you push that product out. Once it's pushed out, any further improvements have to be sort of moved to the next stage, and then you have to code an entire new set, or take, I guess, 3 months of live testing before you are comfortable of shipping that upgrade out again. Like, I think the concept of like shipping sort of incremental updates out live is good in theory, but I think in practice it opens you up to different hacks. I think also on the security side, I think there are protocols coming out that pay attention to security exploits more and more frequently now. I think audit shops are quite, I guess, archaic in that sense, simply because they take it is a human reading the code, and humans are always prone to making mistakes as well. So you have some audit shops where after they've got audited, they immediately get exploited, showcasing that audits don't really make much sense. It all depends on the quality of the auditor, basically. But I think we can replace that with code and AI over a long period of time. So one of the projects that we invested in is basically a code spoofer that runs your code through its own database and tries to check common attack vectors and verticals for your code, and then it will highlight certain exploits or exploit possibilities or vulnerabilities as they come up in a sort of testing box of sorts. So I think more interesting protocols like that can come up, and stuff like Gauntlet, for example, that does real-time risk management for live assets in Aave, for example, help. So more of that, I guess, is needed, but it's still very disheartening to see stuff like EULA happening in 2023 after we've gone through so much already.
Yeah, I think it sucks. It's just one of those situations, and hopefully we can find implement some standards that can help DeFi progress forward. It's a difficult one because it's really up to the protocol, right? There's no industry standard. It's not like it's being monitored by the FDIC or some regulatory body that's going to impose some standards. It's this is the benefit of DeFi, but also it becomes a drawback in some respects.
And I think also the fact that you can hackers can immediately send their funds to Tornado Cash is a pretty big deal, because if they didn't have access to Tornado, for example, I think you would see the incentive to hack a lot lower, because how are you going to get your money out, right? And we've seen regulators work with exchanges before to blacklist and pools of capital sitting in certain accounts on exchanges. So, but once it goes through Tornado, it's really that's nothing anybody can do.
But do you believe morally in applications like Tornado, given it's I guess free environment to create what you want?
So as I said again, it's a very fine two-edged sword. I understand the benefits of Tornado. I also see the risks. I think structurally, yes, privacy is a right that everybody should have. But the adverse implications of what Tornado allows hackers to do is definitely hurting the industry.
It's kind of a big statement, but it kind of also can do more harm than good in a lot of ways, because the average user, I don't know, does the average user need that level of privacy, or is it mostly going to be used for exploitative measures? It's that's the question you have to ask.
I mean, it's the same thing when Bitcoin first started, right? Everybody was using it for criminal activity or something. That's how it's always going to be. You can't stop that, right? So, but you hope that over time, as the technology matures, that becomes a smaller and smaller part of the use case. But for Tornado, it seems that we're still at that early stage where it's primarily used for hackers.
So, are there any other interesting sectors you're looking at before we wrap things up? I'm cognizant of time. I don't want to take up too much of your time. I know you're a busy man, but anything else you want to share with the viewers? Any interesting sectors, narratives you're looking at, projects?
We actually recently we've done quite a bit of stuff on the non-token side of things. So pure equity startups, looking at different ways retail participants can interact with the blockchain. So account abstraction is one of those sort of themes that is quite popular now. How to make it easier for people to interact with the blockchain without having to custody your own keys, without having to deal with hardware wallets and such. I think that is pretty important to sort of get crypto into the hands of 1 billion people. One thing I do recognize is I think 99% of the population should not be in charge of self-custody. I think self-custody as of today does more harm than good for the general public. You need some sort of intermediate sort of middle ground where a third party takes charge of your security for you. But that is, I guess, quite antithetical to a lot of what crypto represents. But in reality, it is what is needed in order to get crypto to mass adoption. So, stuff like that is what we've been seeing a lot of on the venture side. It's not directly, relatable to, secondary market investing, but this is sort of what I mean when we're taking a 5-year approach to how we want to push the space and how we want to fund the right protocols to, get crypto out there.
Is there one self-custody solution that you've heard about and you're like, wow, like this could actually work? Is there any specific one that comes to mind? Because I agree with you. I think it's a massive pain point.
Not yet.
Not yet?
Yeah.
Still waiting for the one.
I mean, I still think having a physical hardware wallet, having to note down, like if you know the extent to which we go to protect our keys, it's insane.
I know.
It's,
I mean, maybe I don't know you, even for me, but let alone.
I'm sure.
Right?
So we do so but right now it's not enough. And it's nowhere near I would say commercially viable for most people.
When I'm traveling, I basically need to strap that thing to my body, and I just traveling is the worst when you're trying to trade. So obviously I'll have more hot wallets when I'm traveling. I'll keep actual stuff somewhere else.
Yeah.
But it's such a pain. It's ridiculous, but especially if you want to manage funds when you're away. What if you go away for 3 months? You're gonna need it's.
And I think one thing that hasn't really been experienced by most people yet is what happens on death. How do you transfer assets when people go? Because in the traditional world, your bank will be like, okay, we'll transfer your assets to your next of kin, yada yada. But in crypto, if you don't tell someone of your private keys before you die, that's it. Poof, your assets are gone.
You know what the reality is? Most crypto participants are still in their 20s and 30s.
Correct.
We haven't really experienced the brunt of percentage-wise. Yeah, this being a theme. Obviously, one day it will be.
One day. But
by then, I think if you're still in crypto by then maybe you don't care. Maybe you've got enough real estate and your mansion and your I'm kidding, but yeah, by then you'll be sorted, so you won't need to worry about
we'll see
your Bitcoin anymore. We'll see about that.
Yeah.
So I guess one last topic I wanted to ask you was, how do, and obviously you can't give financial advice, but just more in general advice terms, how would you approach the market as a retail participant? Because there is so much noise, and there's new trends every day, and it's very hard to sort fact from fiction. So I mean, how would you approach the market? What kind of strategies could you look at implementing for your average investor?
So I think if you are starting out with a small capital base, you have to go on chain. I think anything on Binance is basically not worth touching for you, because as a small starting with a small capital base, you are unconstrained by liquidity, which is a huge deal to any larger player. So you have an opportunity set that no larger player can look at simply because it's not worth their time, or they cannot realistically buy the token. So you absolutely have to be on chain. I think that's where majority of the alpha is. There are tons of smaller accounts managing like sub 7-figure portfolios that are absolutely crushing it, even in this environment. I think that's the first thing. I think the second thing is to also understand, I think, have a long-term structural view of the market. So I guess like I sort of have three simple heuristics of how, depending on where I think the market is. So if I am max bearish, I'll be full cash. Like I no ETH, no BTC, just pure USDC and maybe some fiat. If I'm sort of medium term bullish, or like if I am bullish, moderately bullish, then I'd be looking at having exposure to majors. And then if I'm maximum bullish, I'll be having 100% of my portfolio in altcoins. So that is the three sort of buckets I would have in terms of risk. And then a lot of what you should be asking yourself is basically, which bucket should you be in right now? Right? Should you be most aggressive? Should you be moderately aggressive? Or should you be very conservative? And if you pick the right bucket at the right time, that will often make or break your return profile relative to the market. For example, if you were max long in 2020 and 2021, you would have likely made a killing. However, if you had that same strategy going into 2022, you would have lost everything. So knowing when to be in which mode, I think, is very, very important. And there's obviously no simple answer as to when, like what mode are we in now, for example. How do I determine which mode I should be? That is something that you need to figure out by yourself.
Well, I have to ask, what mode are you in? I have to.
Not financial advice. We're pretty moderately bullish. All things considered, you had the world ending in the last 3 days for crypto. You have basically everything that's going on right now, and the fact that where prices are at, points to me that the invisible hand of the market says that market's going to go up. Not financial advice.
Of course, I assume the moderate. Maybe the reason you're not, and I'm speaking for you here, but maybe the reason you wouldn't be like full aggressive is just because there are like small headwinds that could like affecting macro.
Oh, there are plenty of headwinds. Yeah, traditional finance, contagion happening, choke point, inflation still being higher for longer. The list can go on. So, but there's often the saying called bull markets ride a wall of worry, and I do think that we may be in one of those situations now. But we'll see.
It's your interview, but if I have to chime in here, then I am like pretty significantly in cash. Significantly as in like 30% plus, maybe 30 to 40%. I haven't done like the exact calculations. For me, that's pretty heavy because I'm fairly degen, and the last cycle there were points where I was much higher than that. But right now I'm still holding a fair bit of cash just in case. Capital preservation's that was like your number one rule, right? From last cycle. So if I miss out on a tiny bit of gains, that's okay. I'm willing to accept that for the trade-off of having some security in case something happens, and also having liquidity to be able to take opportunities. Because I think a lot of people that don't keep dry powder, there may be an amazing opportunity that arises in the market through like some sort of event or some sort of project-specific event, and they're not able to take that opportunity because they don't have liquidity. So that's kind of the reason why you want to have some, but then you got to work out at what point you want to have like what kind of weighting, because you can be over liquid or under capitalized in terms of cash weighting. So depends. But no, super. Like I really, really enjoyed this discussion. I'll have to have you on in the future for an update. I think there's going to be a lot of stuff that goes down, so I'm sure we'll have plenty to talk about next time as well. I could probably talk to you for like 3-4 hours if I could.
You had great questions.
Well, thank you very much for joining. And
My pleasure.
I'll chat to you later.
All right, ciao. Bye.
And to the audience as well, if you did enjoy the show, make sure you smash the like button. And if you're not already subscribed, make sure you subscribe and click that notification bell so you're notified every single time we upload a video. I'll be back next week on Saturday for another interview series show. I'll see you guys later. Peace out.